So let me introduce myself. My name is Judy Mark. I'm the president of Disability Voices United. We're an organization founded by the people who got the self-determination law passed in 2013. I was part of the small group of self-advocates and family members and advocates who got the law passed. And now I'm going to turn it to Tina Ewing Wilson, my partner here, who was around long time before I was. So go ahead, Tina.
My name is Tina, and my service dog's name is Buddy. And I've been in the self determination program since the pilot. So I entered in 2001, so 24 years ago. So I kind of know what I'm doing most of the time, except when they change the laws.
And even then, you still know what you're doing. So DVU runs a lot of different training programs on the self-determination program. And we offer a lot of opportunities for you to learn. I'm going to tell you about a few of them now, and then we'll get started. So, the first thing I should tell you is we have two books that we have written and published about the self-determination program. The first one is actually called Think Outside the Box, which is what this series is named off of. You can order Think Outside the Box on Amazon, and it's very easy to do. You can order it and then they send it to you. We also have another book called Profiles in Self-Determination, which is a story of 10 individuals in the pilot or who are entering into the self-determination program. And it really gives you sort of like you understand the program a lot more when you're seeing people actually living it. Um, in addition to this training program monthly, we have another training program monthly called SDP Connect. It's a bit different than this. That the SDP Connect is where we are talking about current issues around the self-determination program or around the developmental disability system. So it's not a replacement for Think Outside the Box. It is a complement to it. For example, we talked in January about the state budget and its impact on the self-determination program. We talked in December about a new law that was going into effect on January 1st, which subjects the regional centers to the Public Records Act. We have talked about, current changes in the way that the state is requiring the self-determination program to be out there. We have featured lots of experts. I can tell you next month in February, we're featuring three or four wonderful speakers who have founded an organization called CALIF, or California Independent Facilitators Association. CALIF is a brand new organization that is made up of professional independent facilitators. And they have certain ethics and standards. And they're going to talk to you next month about why they created CalIF and how you could find an independent facilitator who's a member of the organization who has met certain standards of ethics and education and training around the program. Um, so let me tell you about this series. This series is called Think Outside the Box because it is a step-by-step explanation of the program. Um, if any of you have gone through orientation, you know that it's in 2 hours, although we're hearing there was a big meeting today about how they're changing the orientation and making it a 4 hour orientation. But basically you learn the very basics and you forget everything that you learned when you actually need it later on. And so this training program allows you to go back and watch old episodes. So we started this program about a year ago, the Think Outside the Box training program, and we started with person-centered planning, and we moved on to transitioning supports that you can get to go into the SDP. We've talked about creating your individual budget, and how to develop a spending plan. That was actually so much information that we split it into two parts. There's spending plan part one and spending plan part two. Today we are talking, we're in our next session, which is talking specifically about financial management services. And then we're going to finish off the training next month, where we're going to be talking about transitioning the sort of the final pieces of transitioning into the SDP. For those of you who may have missed our previous trainings, it's all available on our YouTube channel, which is in the chat. Um, the that all of our videos are show up in both English, Korean, and in Spanish. So you can hear the interpretation live when you go back into it. It's also a great resource where it's like, well, I watched it, but I can't remember what was said. So you go back and just watch that one section. It's there available to you all the time, when the orientation is available to you only live when you're doing it. Um, so, we are going to get started now talking about the FMSs. We are going to take questions at the end of our presentation. We promise you there will be plenty of time for questions. You are welcome to have questions about any part of the self-determination program. It doesn't have to be just about FMSs. I'm already seeing somebody's hand up. I'm not sure what question there would be, but go ahead. I've asked you to unmute, Caesar. Did you have a question? Caesar de Guzman, go ahead.
Yeah, I'm sorry. I didn't mean to raise my hand. My
Okay,
apologies.
no worries. Not a problem. Okay, we'll go ahead and your hand is lowered. Perfect. Um, all right. So if we could share screens, we're going to share the Spanish slides first, and then we're going to share the English slides. So I'll let our staff do that.
We also have Korean.
Oh, we also have Korean slides. So you organize this part, Kaylee.
Okay, so I just shared the Spanish, and then Kyungshil, you could go ahead and share the Korean. And I can't see when that's up. So Judy,
It is
let
up.
okay, let Michaela know. Michaela, you could put the English slides on now. Thank you.
Oops. You were seeing your whole screen. There, no, there. Well, we're going to come back. So, folks, you should know that you can choose which slides you want to see by going up to the top of your screen, and you can choose Espanol for the Spanish, Korean presentation, or English slides. All right, so let us begin. So we can already go to the next slide, please. All right, as I mentioned, we started with the road. This is the roadmap. We have already done sessions on transition supports, person-centered planning, budget development, two parts of a spending plan. Now we're talking about FMSs, and next month we'll do our final session of transitioning into the program. And then we'll determine whether we start all over again. Can't guarantee it, but we hopefully will start all over again, depending on how many resources that we get. So next slide, please.
What is a financial management service? FMS is the only required vendored service in the self-determination program. It ensures participants comply with legal and regulatory requirements like workers' comp and insurance. It manages payroll, taxes for staff, and payments for goods and services.
So,
Next
you
page.
know, so let's not go to the next slide yet. I'll explain it just a little bit in more detail. So everybody has to have an FMS. Like some people have like, can I be my own FMS? No. You must have an FMS that is already vendored with the regional center. That is a requirement. There are about, I think, 35 or 40 of them now in the state of California. We're going to put some stuff in the chat which shows you how to find um, the names of what FMSs are out in the world, and which ones work with your regional centers. Um, And this is more generally what FMSs do. But now we're going to go to the next slide and we'll
Oh,
get
wait.
into more detail. Yeah, go ahead.
There is one other thing financial management services do for you, which we don't always talk about, but it's very important. Financial management services protect your benefits. Because we use a financial management service, the money never goes through our hands, and so that protects us from it affecting our benefits.
Excellent point. We should add that in the future. All right, next slide, please. All right, so um, they have very specific, FMSs have very specific responsibilities laid out in state law as well as in directives that the state of California through the Department of Developmental Services puts out. One of the things that is critically important is they are tracking your spending to make sure that you don't overspend your budget. So let's say you have an annual budget of $50,000. The FMS is required to at least send you a report once a month with your with how much money you've spent in each of your service categories. Um, the those there are some FMSs which actually have a portal that you can go onto and see how much you've spent in real time every single day. But not, many of them do not have that yet. I'm hoping that will be something in the future. They are each of the FMSs are paid a monthly fee that does not come out of your budget. It comes out of the regional center pays it. The fees run anywhere from, I believe the lowest is at $300 a month and the highest is $900 a month. I may have that wrong, so don't quote me on that. And it's not something necessarily that you need to worry about because the regional center is paying them. The amount of money an FMS gets for their fee is based on the model that they're using, and we're going to talk more about that in a second, but also the amount of services that an individual has in their spending plan. So the more services a person has, um, the more the FMS gets paid, and it's capped at, I believe, $900 a month. Um, the you should know as you are researching FMSs that not all of them are the same. Not all of them offer every model, and not all of them offer the same kinds of services. And so we're going to help you figure out what your needs are and how to interview an FMS during this presentation. All right, next slide, please. So there are three models of FMSs, and not all FMSs offer them all. So the first model is called the bill payer model. These are for participants who have no staff that they have hired directly. They may have staff that they're using through an agency, which is fine. And then that agency bills the FMS. But basically, the only things that the bill payer model can pay for are invoices that come from organizations, agencies, or companies where you're getting services, or for purchases of goods or of items. So let's say you're purchasing a, a special pad for a wheelchair. That the bill payer model could pay for that. So there are two other models, and you should know that the bill payer model is part of the other two models as well. So if you're a co-employer or a sole employer model, they're also bill payer, meaning that they also will pay for um, invoices, and they will also pay for items that you purchase. So the co-employer model is specifically related to hiring staff. And in the co-employer model, you are hiring staff, but you are sharing the responsibility as an employer with the FMS. So the FMS is what's called the employer of record. In the sole employer model, the participant is the employer of record, and so therefore assumes more responsibility for being the employer. We're going to get into a little bit more detail on that in the next few slides. So go ahead to the next slide, and this is yours, Tina.
Bill payer model. The FMS handles payments for goods and services. Participants don't hire staff directly. They must use an agency for staff. It pays for services from agencies or organizations that have business licenses and purchases items in a spending plan.
So let me explain just a few of these pieces. So once again, if you are hiring staff, maybe, and you're using a supported living agency, then that agency would just send an invoice to the FMS and get paid. But all of the sort of employer taxes and other issues related to being an employer are handled by that agency. And they're going to handle workers' compensation insurance, they're going to handle liability insurance, and they are then billing for all of those services to the FMS. Um, let me talk a little bit about the second bullet with business licenses. So I have seen people in the STP try to put a staff in as a consultant to say, okay, they're not really a staff member. They have their own business. And the first thing that will happen is that the FMS will ask you, I need to see the business license of that individual. And the reason you should know that is because there are very, very strict rules in the state of California about what an employee is versus what what's called a 1099 or a consultant or a non-employee worker is. And there are very strict rules on that. And FMSs are responsible for ensuring that you are abiding by state labor laws. And that is a big one. So don't try to sneak your caregiver under, as a 1099 worker. It's not going to happen. You're breaking all kinds of laws doing that. Um, However, you may have people working for you as who are an individual. Let's say you've hired an art teacher or a piano teacher. They will come into your home at a set time and give you lessons, but they must have a business license and provide that license number to the FMS, and then they can send their invoices to the FMS. All right, that's all for that one. Let's go to the next slide. All right, the co-employer model is one of the two models for when you are hiring staff directly. In this case, the FMS is the official employer of the workers. So they are the employer of record. So there are lots of pros and cons to each of these models. Um, oops. Oh, oops. Sorry, our English is gone, and we are seeing other slides. Uh, Michaela, can you get down? Can you stop sharing? Oop, there we go.
Sorry, it's still up on my screen, so let me figure out why that's happening.
Okay.
Because it was still showing for me. So 1 second, sorry.
Okay. Yeah, because I think you were sharing your entire
I was
desk.
just sharing that window, but
But we were seeing everything. So
everything. Let's see how it goes. And now it's gone completely.
no worries.
Can you just let me know the slide number, Judy?
It's 7.
Thank you. And see how it goes.
We are in there.
Okay. Thank you.
Fabulous. Sorry about that. So the co-employer model is a very so as I'm saying, there are pros and cons to these models. So while you really do get to go out and interview staff in the co-employer model and decide who you want to hire, the thing about the co-employer model is that the FMS can reject your employees. They don't even have to tell you why, although most of the time they will. But it might be that they have a criminal background check that shows that maybe they had a DUI or driving under the influence of let's say, alcohol, from 20 years ago. And maybe it's something that you don't personally care about because maybe they were 21 years old at the time and now they're 41 years old and you know that they're not going to do that anymore. But the FMS may decide, no, we have a tolerance policy. If they've ever had a DUI, they are not working under us. So there have been many cases of that happening. So we want to give you all the pros and cons. Um, the employees also will follow the FMS's employees' benefits. So, something that you should know is that health insurance is required to be provided to all employees if you work for a company or organization that has 50 or more employees. And so, in almost every case, the FMS has more than, in the sole employer model, I should say, has more than 50 employees, even if you personally don't. So that means that they're required to provide health insurance um, for your employees, even if you don't have money in your budget to pay for it. And that money, they're not going to provide, the FMS is not going to pay for the health insurance out of their own pocket. They're going to bill you for it um, through these something called the employer burden rates, which we'll talk more about in a second. So it's just so that you know that it generally costs significantly more to use the co-employer model than the sole employer model because of some of these rules and restrictions. In addition, the financial management services provides workers' comp and handles paying taxes. Um, but you should know that they do that for the sole employer model in many cases as well. But they definitely do that in the co-employer model. So in most cases for the co-employer model, the rates that you're paying um, out of your budget are going to be higher for the co-employer model than for the sole employer model. All right, let's go to the next slide,
Wait,
please.
Judy.
wait,
Yeah,
Judy, I just wanted to add something.
good.
Um, in the co-employer model, they can also reject your employees if that employee already works for another participant at the same FMS. And you won't run into that in the sole employer model. You won't have a person rejected because they're at the same FMS. Because in the co-employer, the FMS is the employee of record, and so they have to pay overtime for employees that work for multiple clients at the same FMS, and it makes it really hard for them to figure out who's going to pay for that overtime.
Yeah, that is a really important point to make that the employer of record, if it's, XYZ FMS, if there are, by the way, there are many SDP workers who work for more than one FMS. Oh, sorry, work for more than one SDP participant. I can tell you my son has 6 employees, and 3 of them work for more than one SDP client. And so if you're working for more than one SDP client and they are both the XYZ FMS, then they're going to have to start paying overtime. And that is not something that you're going to have money for in your budget at that kind of level. So just remember that as well. Very important point. Let's go to the next slide, please.
The sole employer model. Participants in the participant is the employer of record. The FMS will do the payroll taxes. You have the most control over whom you hire and how you manage them. You decide what benefits you want to offer your employee. You have to include them in the spending plan. And children will be able to be employers soon. Also, there whether you're in sole employer or co-employer, it's the same amount of work. A lot of people think that the FMS and co-employer does a lot of the work. They don't. You still have to find the employees. You still have to do a lot of your scheduling. You have to do a lot of things in either model.
So I'm going to also mention that the sole employer model is the purest model of self-determination. In most states around the country, the co-employer model doesn't even exist. There is only the sole employer model. And so um, it is the one where people have the most control over their lives, and no one else can make decisions for them. Um, I can tell you that there's been a lot of misinformation out there about the sole employer model. And I'm going to try to correct it right now. People are saying that in the sole employer model, if your employees can sue you and take everything you have, that is absolutely not true. Okay. In the sole employer model, you are still required to have workers' compensation insurance and liability insurance. In the vast majority of cases, you purchase that sole employer, I'm sorry, you purchase that insurance, that workers' comp and liability insurance from your FMS. I can tell you that my son is in, both Tina and I are in the sole employer model because we are believers that it is the purest form of self-determination. And in our case, we're forced to pay for that insurance through the employer burden rate of our FMS. I have heard recently that there are a couple of FMSs who are now providing the option in the sole employer model for you to provide your own workers' comp and liability insurance. I can tell you the way you get that is through homeowners insurance. If you own your own home, you are required to have insurance. And if you look at your insurance policy, you already have some of this insurance in there. If any of you have ever had a housekeeper or a babysitter or a nanny, those folks are protected by your homeowner's insurance. I should also mention if you have renter's insurance, it's also in there too. So you don't have to be a homeowner. And so you already have that. You can also you can ask your insurance for additional protection if you want to get an additional what's called a rider to protect you even more. I can just tell you, and by the way, whatever additional cost that would have, you can shift that cost to the SDP. You can't shift your homeowner's insurance. If it's just your regular homeowner's insurance, you must continue to pay for that yourself. But I can tell you that if we wouldn't have to add anything to it because all of the people who've worked historically since my children were born are all covered and protected by our homeowners insurance. And so there has never been a need for us to do anything more. And it saves you a lot of money, by the way. It really saves you a lot of money to have an employer burden rate that is just basically the taxes that you're paying, as opposed to also all these insurance. All right, let's go to the next slide, please.
Sole employer model, liability insurance, workers' comp. Most FMSs require participants to use their insurance and employer burden rate. A few FMSs allow participants to arrange for insurance, part of homeowners insurance.
Um, so yeah, so this is exactly what I was talking about. Most most FMSs are requiring you to have your to purchase from them your liability and workers' comp insurance. And that means that the employer burden rates are often similar between the co-employer model and the sole employer model for the exact reason that you're getting the same thing. So here is my case for the sole employer model then. If you're having to pay about the same amount with either one, then you might and you're equally protected in either one, you might as well use the model that gives you the most control. Because in the co-employer model, FMSs can and they have rejected employees. So you might as well use the model where you have the most control. All right, next slide, please. All right, now we've been talking about the employer burden rate for a while, and now we're going to actually explain to you what it is. So every FMS has a very specific rate that they are allowed to charge for every dollar that is spent on an employee. So if an employee makes $20 per hour and the employer burden rate is 20%, that means that $4 uh, for every $20 that you're spending on per hour on that employee, an additional $4 is paid to the FMS. It means that instead of actually paying that person $20 an hour, you're paying them $24 an hour. And when you're doing your spending plan, you have to be very precise about including the employer burden rate. So you must find out what the employer burden rate is for your FMS, and then you have to put them in your spending plan for that total amount. You should know that employer burden rates vary widely, and I'll tell you why. Um, so first of all, actually, I'm going to do the next bullet, which is what makes up the employer burden rate. It includes, at a minimum, the share of federal and state taxes that the employer must have. And that is specifically around Medicare and Social Security. I'm sure that most of you have jobs. And if you look at your pay stub, you will see Medicare and Social Security on your pay stub. And in it, you'll see that you as an employer are paying 6.5%, and the employer is paying the other 6.5%. And so that's nationwide across the country. Every employer must pay that share. In addition, what goes into the employer burden rate are things like this liability insurance, workers' compensation insurance, as well as any benefits such as health insurance or retirement benefits that you are providing, as well as sick leave. Like in the state of California, every employee gets 40 hours a year of sick leave, regardless of even if you only work 5 hours a week. And so that sick leave is also put into the employer burden rate. The reason why there is wide variation is because there are some FMSs who are pretty new companies. They've maybe been around a year or two, and they do not. And so when they go out to purchase workers' compensation insurance, they don't have a long history. And so the insurance companies are like, well, we don't know what you're going to end up charging us. What kind of claims will come in. So we're going to end up charging you a lot of money in the first 5 years that you're getting workers' comp. Over time, your rates will go down. But there are some FMSs that have been in business for decades. They are national companies and they have a long track record around workers' compensation. And so they're able to negotiate a much lower rate. So that's where you're seeing the variation. There can't be any other variation than that. It used to be, even as recently as in the last year, that FMSs could put in anything they wanted into their employer burden rate. They can just, say, well, It's costing us a lot of money, so we're just going to put in more. We're going to put in another 1 or 2 or 3%. The state of California said that that is illegal. They're not allowed to do that anymore, and that every single FMS's employer burden rate must be approved by the state of California. So when you see those rates that we put it in the chat, how much the rates are. Um, if you look at the rates on the DDS website, and let's say it says 20%, but when you contact the FMS, if they're saying no, our employer burden rate is 21%, you need to contact the state of California because they are not allowed to charge you any more than what's approved and that is on the DDS website. So be sure to check the DDS website when reaching out to these FMSs. All right, I'm moving forward to the next slide, please. All right, choosing an FMS. Is this yours? Yes, this is yours.
Yeah. You need to evaluate FMS providers to match your service needs. They don't all offer the same things. Consider the level of employer responsibility you are comfortable with. FMSs have different budget caps, and you need to find out which FMSs serve your regional center. Some won't pay for medical services like nursing, and some have wait lists. It's a good idea to interview several companies before you choose one, because they all do things a little differently. And you want to know whether they're going to work well with what's in your spending plan. You don't want to go with an FMS that's got a budget cap that you don't fit into. You don't want to go with an FMS that refuses to do credit card payments when you have things that need to be credit card paid. Um, so it's just good to interview them carefully before you choose.
Yes, I completely agree. I'm going to explain a little bit more about some of these pieces. Um, the FMSs have different budget caps. And that means that they may say anybody who has a budget of over $150,000, we're not willing to take you. Some of them have a $250,000 cap, and some of them have no cap at all. You want to see what your actual budget is. You don't want to start interviewing FMSs before you know what your budget is, because you have to have that information. Um, the the reason why some of them are capping it is because FMSs are paid after the fact. It's called in arrears is the legal term for it. It means that let's say you have 3 staff and it's cost $5,000 that month. The FMS is paying the $5,000. Then after they pay the $5,000, they go and bill the regional center for it. And it can take a while before the regional center pays them. And so they have to be able to have enough money in their bank account to be able to put out that $5,000 without worrying about getting paid back for it in the near future. So the it is really important that that you do your research when you're talking to these FMSs because you don't want to like go all in on an FMS and then find out that they don't take the size of your budget. You also want to make sure that that FMS is vendored with your regional center, and that is also on the DDS website. Not all FMSs work in all regional centers. Many of them actually don't. Um, okay, so we can, oh yeah, and you should know that there are some FMSs that absolutely refuse to pay for any medical type services like nursing services or services that have to do with providing medication or cleaning out feeding tubes or things like that. Those FMSs are what I'll call risk averse. Like they don't They don't want to get sued if something goes wrong with this employee who does something incorrectly. And so therefore they will not take any clients that have any healthcare services on their spending plan. And even giving medication. You should know that there are some FMSs that will not allow you to have employees that ever drive you. Like that's obviously a really huge issue. And so you need to make sure that you are asking these kinds of questions when you're interviewing your FMS.
Some other things to keep in mind too is if you don't want to have your workers' comp covered by your home insurance, you want to find out whether that FMS offers um, workers' comp. Most of them have you get it through them, but not all of them. Some of them make you go figure it out on your own, find a company and vendor, not vendor, but onboard them and get paid that way. And not all companies are willing to do that. So ask lots of questions. The other thing you need to make sure is that they have customer service that's actually useful to you. You need to be able to contact the FMS and get a reply when there's a problem.
So I'm seeing some things in the chat that I think are important to talk about right now, and that is what the actual rate is of the employer burden rate. Um, so I know I see that someone is saying that the employer burden rate for GT independence is incorrect on the DDS website, and that DDS has been informed about it. Um, I have brought this exact issue up to DDS, and they said their information is correct on their website. And if the FMS is telling you something different, the FMS is wrong. So that's all I can say. You should know the state of, DDS is wrong a lot of the time about lots of things. So I wouldn't put it past them to be wrong, but they have told me very specifically that whatever is on their website is what they have approved. I'm also going to sort of mention something that Miriam put in the chat around an additional cost that can be added to the employer burden rate called other employment related costs. That other employment related cost must be approved by DDS because honestly, there are very few things that they'll approve under that category. It can't be just the cost of doing business. It can't be, well, people, it takes us a long time to onboard people. It cannot be those kinds of things. And so that must be um, confirmed by DDS. And the fact that that cannot be the reason why DDS listed burden rate is different than what the FMS is saying. What is listed on the DDS website is what their rate should be according to DDS. So if you're seeing a difference, you need to contact DDS about this and let DDS handle that negotiation. All right? Okay, let's move on to the next slide, please. All right, so choosing an FMS is often challenging. Um, you may need to put out a call or an email to all of those who will who are at your regional center and who have your budget level. You may need to call all of them because some of them have wait lists. Um, so some terminology that I want you to know is that unfortunately, FMSs use the term vendors for any of the activities or services that you have besides your employees. So let's say you are taking a class at the local community college, or let's make it easier. You're taking a karate class at a local karate studio. They are going to require that karate studio to become a vendor of the FMS. And the reason why this, first, there's a lot of problems with this. Number one, the term vendor becomes very confusing because vendor is the term that is used in the traditional system for the service providers. Every single service provider in the traditional system is a vendor. And so the fact that they're using the same terms becomes very confusing because no one is required to be a vendor in the SDP with the exception of the FMS. So the fact that they're using the same term, I beg them all to start using a different term like a contractor or something. The second issue is that your local karate studio very likely is not willing to become a vendor. It becomes an issue because they have to fill out paperwork and do all this stuff. And it's like, they'll be like, I don't care enough about the $50 I'm getting from you to do this paperwork and to bill them and send them an invoice. It becomes very uh, annoying to them. And so, one of the things you want to make sure is to try to make it as simple as possible for the service providers that you use. So one of the things that's critically important is that if there's that you want to ask when you're speaking to your FMS, like if I take a class at a karate studio, do you have a credit card that can pay for that class? Instead of making that karate studio become a vendor and then sending in invoice and wait to get paid. So not all FMSs offer credit card payments. The vast majority do, but not all of them do. So that's an important question for you to ask. So the next bullet point is a very, very complicated issue that I'm going to talk about very briefly, because it is so complicated, I don't want to get into too much detail. And that is whether your employees are required to take breaks and a 30-minute unpaid meal time, as well as at what point are they subject to overtime after 8 hours or after 9 hours? And it's a very complicated issue because there are certain types of caregivers, like IHSS workers, who have a very specific set of rules where they're not required to take an unpaid meal break each day. Because if you leave the person you're caring for alone for 30 minutes, it could, be very problematic for their health and safety. Also for IHSS, overtime does not kick in until after 9 hours because of a very specific rule in state law that I will not get into. Um, the problem is that workers in the SDP and in the traditional system, it is unclear where we sit. I think it is very difficult to see to know, do regional center paid for vendors and their employees, do they have to take breaks, and when does overtime kick in? It is an issue that one of our board members, who is a prominent labor lawyer at Stanford University, has been trying to deal with the State Department of Labor and with DDS around this. And we cannot get them to make a decision and to clarify the issue for the state. So what has happened ever since? Because there's no clarity, there have been horrible lawsuits against several FMSs where they've had to settle the lawsuits for millions of dollars because staff were not getting paid meal breaks. And so, because of that, the FMSs have become very cautious, and they're making every employee sign a paper saying, I acknowledge that I am not going to get my 30-minute meal break, and I will not hold my FMS accountable if I do not get the meal break. Uh, so I'm sorry that's very complicated, but it is really important for you to try to understand. The other thing you want to do are things like ask the FMS, ask your support staff, your team, your family, people who are in your circle of support to give you guidance on FMSs. You can also ask friends, you can go to support groups and ask people what kind of experience they've had with a specific FMS. That's a great way to find out more information. But most importantly, when you contact the FMS, you want to interview them. You don't want to let them control the conversation. And there is a list of potential interview questions in the Think Outside the Box book. It's also, we wrote it, but DDS is using it as part of their orientation, and it is also on the DDS website. Um, all right. Anything else that you'd like to add, Tina, on this slide?
Uh, on this side, other than I really wish they would stop telling them they're vendors and start just using the word onboarding,
Yeah.
because a lot of people they hear the word vendor and then they don't want to do it.
Hmm.
So if we just you can change the verbiage when you talk to the provider and just make sure you say, are you willing to be onboarded? Because a lot of them hear the word vendor and they run.
That's right. Um, okay. Next slide, please.
Judy, I just want to add that the questions for the FMSs, they're also on our STP Resource Center website. So that's
Thank you
also
very
great.
much, Kaylee, which we have put that in the chat for you to get to it.
Choosing an FMS. There are extras offered by some FMSs, such as an easy-to-use portal, credit card purchasing, vouchers for ride-shared services, easy invoicing processes, orientations for participants and all employees, real-time reports on spending instead of monthly. Judy, you're
I know
muted.
I muted myself because I was coughing because I have a
Been
cold.
there, done that.
Tina and I have a cold that we cannot get rid of. Like the entire 2026, I've had a cold. So, um, I talked a little bit about the credit card purchasing. Um, Let me talk to you about this portal. So there are some FMSs who have these very cutting edge portals where every time a dollar is spent out of your spending plan, you are seeing it in real time. That is a very convenient thing to have because to get a report once a month that's like a PDF that's sometimes very hard to understand, sometimes you realize that they're wrong and it's kind of too late that your FMS has made a mistake. But to be able to check on your spending on a regular basis is very advantageous. But I should also tell you that you should be checking on your spending anyway, because there are times you set up your spending plan a year in advance and life happens, things change, costs are different, and your spending plan is likely different than what you had set it out to be. And you're going to have to change and shift and move monies around in your spending plan, which is a whole other can of worms and problems that we face because regional centers take a very, very long time to approve those changes in the spending plan. But being able to stay on top of it is your responsibility as a participant or a family member participant.
And
I'm
if you can't do math, you can have your IF help you do that.
exactly. Um, a lot of people you put in their spending plan rideshare services like Uber, Lyft, or Waymo. And like many of the FMSs have different ways that they handle it. I believe almost all of them allow it, but many of them have they have an account and they check on the account. And I mean, they have various ways of doing it. So you want to ask them if you're planning to use rideshare services with your STP funds, you want to ask them how it works with them. Um, some of them have very simple to use invoicing processes. Like you just like the vendor can actually upload their invoice onto a particular portal, and then you get an email or a text that it's been uploaded. You click on the portal that it's been approved, and then the FMS knows that they can go ahead and pay for it. So, others have more sort of low tech stuff where you get an invoice from a provider, you then forward that invoice to a specific email address, and then they process the payments from there. Um, the other thing you want to ask is what is the orientation for the participant and what is the orientation for your employees? Because I can tell you that there are some FMSs who say we provide no orientation, we give you a manual. And the manual is like 50 pages. And if you're a person who doesn't like reading long documents, you'd rather have an orientation that's maybe on Zoom and they can walk you through and explain how you approve timesheets and things like that. All right.
I just flat out request those things.
Mhm.
When I'm interviewing my FMS, I'll ask them. I'll say, look, sometimes when I get really don't understand something, I want to Zoom with you. Is that something you're willing to do? And if they say no, I'm probably not choosing that FMS.
That's right. All right. I think our next slide is our last slide.
Complications with your FMS. Now what? Well, it's happened for me, so the best thing to do is ask for a supervisor at the FMS. If you don't know who the supervisor is, ask the point of contact. You can ask to change your point of contact within the FMS. I've done it a couple of times. You don't always click with the person that you're working with, and sometimes you don't like them. So then you can ask for a different one. Reach out to your independent facilitator, your regional center, or the ombudsperson for support if things go wrong. And if all else fails, change your FMS. You can do it at any time, but sometimes your regional center will ask you to do it on the quarter.
All right. So I think that was our last slide. And so we can stop, everyone can stop sharing. Thank you to Kyung Shil and to Michaela and to Kaylee. And we're going to now start taking questions. And I already see a couple hands up, and I'm going to actually, I had never clicked into the document with all the questions in there, so I'm going to do that. Why don't you take the first question while I'm looking over the questions from the chat?
All right, Melissa, I see your hand first. You can unmute. Oh, I gotta actually. Okay,
Oh, I got it.
thank you.
Um, I'm an independent facilitator, and I always tell my clients a few things. Some FMSs will provide you, kind of like Tina mentioned, a rep, a contact person that is assigned to you and can help you with a variety of different things. Other FMSs, you just may have a phone number and you call that number, and whoever answers the phone can attempt to answer your question. So customer service is really, really important, especially in year one of self-determination when you're trying to learn the ins and outs. The other thing is you may know that one of your providers, I'm not going to use the word vendor, wants to get paid at the beginning of the month. You pay karate the first of the month. You don't pay it at the end of the month. So you want to ask your FMS, is that something that they allow? Do they allow to pay it at the beginning of the month, or do they need it to be paid at the end of the month?
Great suggestions. Thanks, Melissa. Okay, we have so many questions in the chat. Let's run through a few of them and then we'll get to our next hand. So somebody was asking about the fact that FMSs are supposed to track funds, but their real-time portals are not working. Um, I mean, that's something you should file a complaint about because that may be the only way for you to know how, whether the whether you're spending enough, whether you're overspending or underspending, right? So if that is a problem, then, you might want to look to a different FMS at that point. Although I do have to say that changing FMSs is really, really hard. It's It's not like a simple task. And the reason it's not a simple task is because, and I don't think it's because of the onboarding of your staff. Like that's actually pretty straightforward. It's because, especially if you're doing it in mid-year, you have to figure out how much funds you have left. Then the regional center has to write a specific authorization for the remaining funds, which is pretty much what you're guessing at, and send it to the new FMS. I can tell you that we changed FMSs in the middle of a budget year for my son, very specifically because my son was moving out of our home and we wanted to start with a new FMS on the day that he was starting, that he was moving out so that that everything would be taken care of. And that was it was very challenging, let me tell you. I think it is a bit easier when you do it at the end of your budget year. Some people are asking about FMSs disclosing their fee. So it depends on what fee you're talking about. There is a monthly fee that the FMS is paid by, that FMS receives from the regional center. You can absolutely ask your service coordinator, your regional center, how much, what level they're funding the FMS at. Could be anywhere between I think $300 and $900 a month. But you can definitely ask. But if you're talking about their employer burden rate, that's a different issue. The employer burden rate it shouldn't be secret. You need to know that because it needs to go into your spending plan. Alana's asking about CalSavers, and actually, we just did a training on CalSavers yesterday, for the East Los Angeles Regional Center. So let me explain this to everybody because it actually does relate to FMSs. Um, so CalSavers is a state retirement plan that employees in the state of California can invest in. So let's say you get paid $1,000 a month, you can designate $50 a month to go into a CalSavers account. CalSavers accounts are only funded by the employee, not funded by the employer. So there's been a law that's been in effect, but it's been updated as of 2026 that basically says that all employees in the state of California, even if there's only one employee for that employer, all employees in the state of California who are not being provided an employer-sponsored retirement plan must be registered with CalSavers and be given the opportunity to open up a CalSavers account. And so the process and the way it works, depending on your model, is that the the FMS in the co-employer model generally registers all of the STP employees on CalSavers, and then CalSavers sends an email to the employee. Here is the critical thing you should know is that the employee must opt out of CalSavers. It's not like you get an email and you think about it whether you want to go in or not. You have 30 days to decide. And if you do not opt out, you will start getting 6% of your monthly paycheck invested into the CalSavers account. So that means for all of you, even if you're in the co-employer model, you need to tell your employees that they're going to be getting an email from CalSavers because you should know there's a lot of people who don't read their emails. So they have no idea this is happening. And all of a sudden they're starting to get less money and they get upset about it. I mean, the one thing I can say is that, even if they get signed up for CalSavers, that's not a permanent decision. You can leave it at any time and you can pull your money out. The good thing about CalSavers you should know, or any retirement account, is that let's say you make $1,000 a month and that you want to invest $50 into CalSavers. You are only being taxed on $950 of income. That $50 that's being invested into CalSavers, you do not pay any taxes, any income tax on that. And it's saved in CalSavers. And then when you get to be a certain age, you can pull that money out of CalSavers, and you do have to pay income tax on that. But there is a presumption that the older you get, hopefully you'll be making more money at the time and you'll be able to afford paying those taxes on it. Um, okay, so let's go ahead and take the next hand up because it is
Miriam is
Miriam.
the next hand.
Okay.
Hi. I just wanted to clarify that the rates listed on the DDS website, the burden rates for the FMS are only the burden rates. They do not include the other employment related costs. So do not go screaming to DDS and say they are charging more. First, ask the FMS if they are charging this, and then ask them for what is called, I posted it for GT. It's called the Employer Burden and Employment Related Costs Template Form. This is what the FMSs need to submit to DDS, and then it is approved or not. And I posted it, and you can see that the employer burden is listed, and that is the exact burden that is listed on the DDS website. And then in the fine print at the bottom, it says additional employer costs for co-employer, and it lists, I don't know, it's 3 point something. And that's why GT is charging 22.71%. The DDS list is not incorrect. A lot of people here know ACE. If you look at the ACE burden, it is listed as 24.86%. But everybody knows that they are charging 25 because they are charging 0.14% of this other employment related costs. And they were also the first ones to tell every IF to please list it that way in the spending plan to avoid this confusion. I just, because there is this misconception, I got it wrong too in the first, when I started working. But please be aware that this is not what the FMS can actually charge, because it's also a mistake by DDS. It should be listed. There should be a column that if the other employment related costs are approved for this FMS, it should be listed, but it isn't. This is solely the employer burden that is listed.
Okay, so that's not the way I understand it. So I'm going to look into this. My conversations that I have regularly with DDS, they tell me that that rate is the entire rate. It includes any other employment related costs, and that
No,
it should not be higher. So I'm gonna reach out to DDS and I'm gonna try to get clarifications.
okay. But it's not, there is no column for it. There should be, you see what is included in the total they have, and there is no column for other employment related costs. It can't be included.
Okay, my understanding is that they're not allowed to charge for this. So that's what I'm gonna get clarified, Miriam. Okay.
Okay.
Okay. Um, uh, Let me look at this one. Which FMSs allow participants to arrange for the insurance as part of homeowners insurance? I do not know what the answer to that is. Maybe if somebody knows, you can put it in the chat, but I actually do not know. I have just heard that from a couple of people. I also tend to, even if I did know, I wouldn't tell you because I tend to not call out any one FMS or another. I don't want to ever look like I'm endorsing an FMS or another FMS. Somebody was saying that their FMS is not allowing liability insurance cost in the spending plan for sole employer, and they don't offer it. They only offer workers' comp, and that they stated that's all that's needed. That's actually that's correct. That most FMSs have liability insurance because they want to be protected in case they are sued. Workers' comp is the only thing you're required to have. So workers' comp, so that people know what it is, it's when somebody gets injured on the job. So let's say you're caring for someone who needs to be lifted from a wheelchair into a bed and you pull your back out. Like that is an employment related injury, and you would file for a workers' compensation claim for that employment related injury. Liability is a totally different thing. Liability is not a work-related injury. It is when you do something wrong, maybe discriminatory, and the employee sues you for it. So let's say that an employee perceives that their employer is racist and that are treating them differently and that they are experiencing racial discrimination. That is a liability issue. That is not a workers' comp issue. And so while you may not um, be required to have liability insurance with the FMS, you should get it. Like, you should get it. And by the way, it is already in your homeowner's insurance and and you don't have to pay any more because it's already in there, guys. I know this because I have had this experience, not the experience, the example, but you should know that I was once sued by an executive director of a regional center for $1 million, an executive director who got fired. And my homeowner's insurance paid for my legal fees to defend me against that claim. And I didn't have to pay anything extra. It was just part of my homeowner's insurance. So if Helen, you are a homeowner, you shouldn't worry about putting the liability insurance cost, or you can also get renter's insurance. You don't have to be a homeowner. But through renter's insurance, you have that liability insurance. Okay, let's go to the next hand up. Oh, we only have one hand up. All right. Go ahead, Tina.
Joanna, here, can you unmute?
Yeah, thank you so much. I actually have two questions. One question is, um, sometimes the FMSs are sending after the fact, like after they already paid for something, they're sending things to the different companies saying, oh, actually, we have to charge you back for blank, and they don't give much information. They just say you've been overpaid. How much are they allowed, like how are they allowed to do that, and who would you even contact when that happens, other than obviously I'm going to assume the regional center, but what do you do in that situation? And then my other question is, can when we know that a vendor has charged us for something that we don't want to pay for and we're disputing it, but the vendor's giving us a hard time about it, can we like expect that the FMS will can get involved in that and help us with this, or is that something that we specifically have to only deal with the regional center on a discrepancy on a bill that like we don't want to approve the whole thing because we did not agree to that, but they're charging us for something we didn't agree upon?
Okay. My brain is tired, so I'm going to answer your second question first because that
Thanks.
is the thing I remember, Joanna. Sorry about that. Um, if you receive a bill from a vendor, from a provider that is incorrect, it is up to you to dispute that. It is not up to the FMS and it is not up to the regional center. You
Mhm.
need to dispute that. And you say to them, I'm not going to forward your invoice to the FMS until you correct the invoice. So does that help answer your question, Joanna?
Yeah, but then they don't want to provide services anymore because they're saying that like especially with like medical services, if you dispute, you run into the situation where they go, well, we're not going to continue to provide services to you because you refuse to pay the bill.
Okay. So if they're charging you for services that they did not provide,
Hmm.
that is called Medicaid fraud. You should
Okay.
know that. And so it's like, it's one thing. It's like, oh, I go to the grocery store and there's a cash register student. Wait a second, you charged me for my bread twice. Like, that's not Medicaid fraud, but you disputed on the fact, like, no, you should deduct one of the breads. That's
Right.
not what this is. This is state and federal tax dollars. And if a healthcare company is overcharging you for something and you are asking them to correct an invoice and they refuse to do it, you can actually file a claim against them with the California Department of Healthcare Services.
Okay, thank you.
Okay, so you should know that just today, all this news broke that the federal government is, because they hate California, is
Yeah.
coming down on California for all this fraud that they think exists within IHSS and regional centers and everything else. Um, so we want to make sure that there is no fraud. Like we want
Right.
things to be neat. Okay, remind me of your first question because my brain is dead.
It's okay. I'm wondering, what do we do when the FMS sends something to one of our vendors saying that they're charging them back for something that they
Oh,
paid for
yeah.
like 6 months ago?
Right. Yeah. This is super common. Like, I literally just heard this story yesterday
Yeah.
from a friend of mine. So, this happens all the time where they pay a staff member too much or they double pay somebody or whatever. Like, that's on them for their screw up. Like, they can try to get the money back from the vendor. You wash your hands of it. Like, you had nothing to do with them, their screw up. Here's the story I heard yesterday. The story I heard yesterday was that a staff member, an employee, got double paid. They got paid twice for hours.
Mhm.
And they're the ones who noticed it. Very honest employee, by the way, noticed that they got double paid and they contacted the FMS and said, "You double paid me." And the FMS said, "Oh, it's such a hassle to go back and change things. What we're going to do is we're just going to use that as credit for the next, so for the next whatever many hours, we're just not going to pay you." Oh, that's Medicaid fraud too, people. Oh, no, 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 no. If they overpaid somebody, it's their responsibility to get that money back. And here was an example of an employee willing to transfer the money back to the FMS. And then the FMS needs to then pay them. Like things need to be neat. You can't just say, "Oh, you're just going to work for 10 hours and you'll use the credit from somewhere else." It's like, no, absolutely not. Okay. Let's go on. We have a bunch more questions in the chat. Those were great questions. So somebody was saying that the FMS charges a 25% burden rate, which each eats up a significant amount of the budget. So true. This is why you want to try to lower that employer burden rate. If I am my son's caregiver and I already have a health insurance and I'm obviously not going to sue myself for injuries, etc., do I still have to get workers' comp and liability insurance? Okay, you need to find a new FMS, is my answer. So, first of all, you should be using the sole employer model where you're not required to have health insurance, and your employer burden rate will definitely be lower than 25%. So, using the sole employer model, you can also try to find the couple of FMSs which don't require you to get workers' comp. Or you, no, actually, everybody requires you to have workers' comp, by the way. You must have it. That's a state law. But they maybe allow you to have it through your homeowner's policy. Um, so you want to make sure. So, but here you are, this person is saying that they are their son's caregiver. And you should not be the only caregiver for your son. I have said this in many different forums, and I'm going to say it again. It is a very, very bad long-term strategy for parents to be the caregivers for their kids with no one else in their child's life. It's a very bad long-term strategy. It doesn't mean that parents shouldn't be in the spending plan for adults. Maybe you could be on there as the backup person, or maybe have one or two shifts. But, you know, if you get hit by a bus, that adult child has no supports at all. That's like a very big problem. So I want everybody to think twice about how much you as parents are the caregivers for your children, paid caregivers, I should say. All right, I'm going to do one more and then we'll go to the hand up. Do people set up their own companies to eliminate the burden rate? As I understand that if you are a company, the FMS does not charge a burden rate. Okay, so let me explain this. The There is always an employer burden rate. Always, 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 if you have staff. Remember, it's called the employer burden rate. If you are an employer, you have a burden rate. If you are using an agency for your staff, then the agency is has the employer burden rate in what they're charging you. You're always paying it. I mean, it's also possible there are people who have no staff at all. Maybe it's a person who's very, very independent and doesn't need staff and has maybe a small budget to use for, you know, a few classes or whatever they're taking. But if you have a caregiver staff, at some point, there is an employer burden rate. It is either being paid to your FMS or it is being paid through the hourly rate that you are paying to your agency. So, an average supported living agency charges around $40 an hour, but they are not paying your direct support professional $40 an hour. They're usually getting paid around $20 or $22 an hour. And that all that extra money is for the employer burden as well as all the profit that the SLS agency is making. There's usually an owner or CEO or something, and they're getting a cut of everything. So you're paying for it one way or the other. But I know that what you're actually asking is, should a parent set up their own company to eliminate the employer burden rate? And I say, I know lots of parents have done this, and I am fundamentally opposed to it. I think it is a dangerous, dangerous idea. And it gets into some very squishy territory of of you know bordering on you're going to get audited. The regional center is going to pay attention to you, and DDS is going to crack down on it. So what I've seen sometimes is parents setting up their own LLC, and then they hire themselves to be part of the LLC. Like that is a giant no-no, and you are going to get nailed on it. Do not do that. Now, I do know of some people who have set up an LLC because they have a very, very large program. Maybe they have a 2-on-1 or 3-on-1. And that LLC, it does not employ the parents. The parents make absolutely nothing off of it. And in fact, spend a ton of time running the LLC. But that LLC handles all the employer burdens. They make sure all the taxes are paid. They make sure that they have all the insurance. They handle all those things. The people that I know who've done this, and it's like 2 people, these are parents with a lot of money themselves, and they can, like, if you don't get paid in time by the FMS, you are out a lot of money for that LLC. So sometimes they've had to put their own money into the LLC while they wait for employees to get paid. And they've had to pay the employees out of their own pocket. So these are generally wealthy people who can have that backup plan out of their own finances if they need it to be. So I never recommend this idea to anyone. All right, let's get that hand up.
Ilona,
Hi, Judy and
can
Tina, the team. Thank you for having me. I have 2 questions, and Judy, I will try to be as quick and simple as I can be to preserve your brain in the end of the day. First question: what do we do when FMS comes to us, and it's a new FMS? I would prefer not to disclose the name right here. Talk about it, and they ask independent facilitator for training on e-billing and an employee burden and many other questions. I contacted ombudsman person in regards to this problem before, and they just told me it's between me and FMS. And I'm thinking, what else can I do? Because this is not fair to participants and not fair to independent facilitators for us to train them.
Right. So you went in a little bit in and out, but I heard you. Ilana was just asking about a new FMS that doesn't seem to know very much about the self-determination program and is asking for advice and education and training from an independent facilitator. I would run away from that FMS as fast as you possibly can. Because, so first of all, you should know that there are going to be standards. It was supposed to be out 2 years ago. I don't know what the heck DDS is doing, but there are standards for FMSs that I'm hoping will go into effect in 2026. And those standards are going to include that the FMS understands deeply what the self-determination program is, understands the rules and their roles. And so if you are having to explain the self-determination program to an FMS, don't walk, but run away from them. You do not want to be using them for sure. Okay, we have a couple more minutes. Let me see if I can run through a few of these questions in the chat. Can you have vendors with sole employer? Yes, as I mentioned earlier, that the bill payer model is actually part of both the co-employer and sole employer model. So yes, everybody can do vendors, all three models. What happens if the FMS makes mistakes by putting expenses in the wrong STP code? Oh boy, have I heard that story before. Is the FMS required to make corrections for these STP code mistakes? Yes. Yes, they are absolutely supposed to correct it. And it's great that you're asking that question because it means that you're actually looking at your monthly reports or the portal and you're able to see this happened to me too, where they were charging, actually it's happened multiple times to my son, where they were charging the wrong things for the wrong service codes. And then of course, lo and behold, we run out of money on a service code because they had been mischarging other things to it. And I made them go back and correct everything. And in the emails that I corresponded with them, I specifically copied my regional center on everything. So my regional center was very aware of the mistakes that had been made and the corrections that I was asking for. Um, when you change FMSs, do you have to go through all the process to onboard staff and businesses? Yes. With the exception of this, is that if you have staff who've already passed the criminal background check, that same background check is relevant for the new FMS. So it's a standard process where you tell them who the staff member is, they reach out to DDS to just get confirmation and it's done. They don't have to do a new life scan. But everybody else needs to do all the onboarding. And it is a pain in the butt, which is why when you pick your FMS, make sure you do your research so that you can pick the right FMS for you. Do you know specifically? Oh, sorry, I already said that. Oh,
I
yeah.
think there's an important one about DDS having a phone number or email if you want to report possible fraud within the SDP system, like a whistleblower line.
Yeah. So you should just always email sdp@dds.ca.gov. That is the general email address of DDS. Ingrid asked, hi, Ingrid. My FMS does not provide any kind of liability insurance. What kind of insurance should I get? Okay, so you're specifically asking if your son gets aggressive and breaks caregiver property. That is actually if your homeowner's insurance should pay for that kind of stuff. It's kind of a small amount of money, honestly, and you don't want to be filing insurance claims for any of that stuff. If the person gets injured, that is definitely under workers' compensation. But if they break one of their properties, um, that is a really great question, Ingrid. I know of people who have been able to figure out how to do this in the STP. I would have a meeting with your regional center and tell them about these issues and problem solve to figure out like what service code, what line item, because this should come out of the SDP and not out of your own pocket. And I think there is a way to make this work. I know of somebody else that for an example is the self-advocate, the participant breaks the toilet all the time by overstuffing toilet paper. And so they actually have a line item for repairing they have like a a retainer with a plumber to just be there at any time. So I know that when things break because of the self-advocate that you can get that paid for. And I also know that there are so many other questions we didn't get to, but it is 6 o'clock. These were such great questions. This is such a good audience today. Really, really appreciate you. We're gonna try, you know what we might do is so next month we're gonna talk about transitioning in, and maybe we'll do uh, the first one of the year, which is like all the questions we didn't get answered in all the previous Think Outside the Boxes, and we'll try to just answer random questions for everybody, and then hopefully if we can get some funding, we'll start this whole process over again. So that because things are changing and actually some of what we've said might be out of date by next year, by next summer. So thank you, everybody. Thank you to our interpreters, to Kaylee, who I love. I've told her already today, I loved her once, and I love Tina as well. So thank you all for coming, and we hope to see you again next month. Take care.